This is Taking Stock on Bloomberg. I'm Pim Fox. We're talking with energy analyst and energy expert Jason Gamble of Macquarie. We're going to turn now to natural gas. You said the primary issue overhanging is inventory. We got a big inventory issue in natural gas too, right?
It's a very big issue, and it's going to be the overwhelming fundamental factor between now and at least the end of the year, probably well into next year. I think it's a situation that.
But there's a hurricane caveat though, right? Because I mean, if we start to hear about all this hurricane activity, that could change things.
You know, Pim, I think it's less of a caveat this year than it is in any other year, and that's just because the inventories are so far ahead of themselves and demand is so weak for natural gas. What I have tended to find over my career is that while the headline is that you're going to lose production early on, a hurricane actually has more severe effects on demand than it does for supply, and it usually leads to a relatively quick price correction as a result of that.
And so now that you've got all this supply with natural gas coming in through all these pipelines and all this new fracturing technology, what's the outlook for the companies in this space? I mean, are they going to just fold up production?
Well, they're stopping drilling. And the decline rate on natural gas in the U.S. is going to be the big correcting factor that we're going to see play out. Because if you stop drilling in the U.S., your production is down 25 to 30% by the end of the year. And we're seeing that happen. The rig count's down about 60% from where it peaked. We're drilling at a level that is vastly insufficient to hold our production flat. So I think what's going to happen is by the time you get to, let's say, the second quarter of next year, the timing could be off a bit, that the overwhelming fundamental factor has an inflection point. It moves from the overhang in storage to the big decline in production. And I do think that's probably a second quarter event next year. We've got to get more rigs back into the field at some point in time to stabilize production. The only problem is if you're drawing inventory in the meantime, you're not going to get that pricing signal.
When this kind of situation takes place, is it a gradual move, or is it something where, you know, someone looks in the storage tank and says, uh-oh, we don't have any more natural gas. How quickly can you start the rigs?
I think this is going to be a V-shaped cycle. I think it's going to be a very quick turnaround in prices. I think you could see prices move from, you know, a 2-handle in September, October of this year up to an 8-handle or 9-handle by the time you get to 2020.
Pretty volatile.
Pretty volatile. I think that this is going to be a type of cycle that's probably going to last a couple of seasons. So I think that 2011 is also setting up for very high natural gas prices. You're probably looking end of 2011, I think, by the time you get the correction from the cycle that I see coming next year.
All right. And Southwestern Energy, they benefit, right? Because they're in the Fayetteville Shale. That's one of your top picks right now in Arkansas, right?
Southwestern is probably my favorite energy pick right now. It's a company that's growing their production 50% this year. It'll be a 33% backward-looking CAGR in 5 years. A tremendous production growth. The balance sheet is pristine. The company will start generating free cash flow next year. Very strong management team. It really, for anyone out there who wants to just take a core position in E&P, and hold it for about 5 years, this is the one to own.
And the technology there, just quickly, this is the new technology, right, that they're really perfecting in this gas drilling.
They're perfecting the application of the technology. It's horizontal drilling and then fracturing, and what they're doing is really optimizing how to do that in the Fayetteville, and it's leading to just these tremendous production growth levels and very strong earnings and cash flow that are coming in the future.
Like 50% production growth,
50%, yeah. And it'll be 30% next year on top of that. So when you start to think about the compounding effect and what that's going to mean for earnings, it's a great growth story.
All right, and if nat gas goes from 2 maybe in the fall sometime to this 8 that you maybe say 2011, 2012, that'll benefit them.
If you get a price kicker on top of a production kicker, that's the best of all possible worlds.
All right, well, it's the best of all possible worlds having you to come in and share your thoughts with us. Thank you very much, Jason Gamble, expert in all things energy at Macquarie Securities.